to FreightWaves Today. It is Friday, and we are jam-packed with unlimited content of unlimited awesomeness. We have Seth Runser. He is the CEO and president. ArcBest is going to be with us. The LTL carrier reported amazingly a 90 OR. We're going to hear all about that. They are doing quite well. We also have David Parker, who's from Chattanooga. He is my dad's brother-in-law, or I'm sorry, not brother-in-law, stepbrother. My uncle, David Parker, will be in studio to talk to us about Covenant Logistics earnings. It's going to be fun. It's going to be a treat that we have you and David, who actually started a business in 1985 together. You both worked at Southwest Motor Freight for the men, the myth, the legend, Clyde Fuller, one of the patriarchs of long-haul trucking, my grandfather, your dad. We're going to hear all about from David Parker. We're going to dive into their earnings, what they're seeing in the market, and then we're going to talk a little bit of fun about the legendary Clyde Fuller, which I can't wait to hear about. And then, by the way, I'm going to tease it, and I'll tease it. We'll talk about it later. Freight Caviar actually did a whole section on Freight Alley and featured Clyde. That is Clyde Fuller in one of his great countrywide cab-overs. He was an institution. He's sort of like Boss Hogg. He was as big as Boss Hogg. He used to have these huge cigars. He was a bit of a hellraiser. But he is one of the reasons, if not the reason, that long-haul trucking exists in terms of particularly the concentration in Chattanooga. And we're going to talk all about that later in the show. And then we're going to hear from John Kingston, give us a roundup of earnings. And then we will finish off. Matt Leffler and I will talk about all of the craziness that is the legal situation, which has never been more relevant in freight than it is today. So lots to talk about, Julie.
I know. I'm like maybe the most excited about today as I have been about almost any of our shows. I'm excited. We have so many earnings to talk about. They really all support what we've been talking about and what's happening in the freight market and overlap beautifully. And we're going to have, great guests.
Bang up show. We have, again, our guest host, Max, my dad. Max Fuller was the founder and CEO of US Express. Dad, any observations about the market? What you're hearing, what are your thoughts as a legacy trucker in this environment?
I know you and the Warner guys are talking about being in the third inning. I really think we're in the first or second inning of a really neat upcycle. I think as we continue to go forward, the drivers are going to be the pressure on the market. I really think rates can go up and go up pretty considerably and really correct what's happened over the last 4 years.
Yeah, make up for a lot of lost ground.
Yes,
I think that's
and building the balance sheets.
We're gonna talk to both ArcBest CEO as well as David Parker, Covenant's CEO, about that shortly. But let's get to the headlines.
We kick things off with a massive equipment theft bust spanning the Carolinas. Law enforcement officers in South Carolina and North Carolina recovered 13 semi-trucks, 3 trailers, and 2 motor vehicles worth more than $1 million during an ongoing Florence County commercial vehicle theft investigation. Florence County detectives arrested 2 North Carolina men last week, Andre Horace David Jump, 38, and Prince Raymond Leon Betts, 37. Each defendant faces 9 counts of grand larceny, along with criminal conspiracy, unlawful entry into enclosed places, and malicious injury to property charges. The Florence County Sheriff's Office accuses the pair of stealing 9 commercial motor vehicles between November 8th, 2022 and October 4th, 2025, with authorities placing the value of that equipment at $876,500. The 18-vehicle recovery highlights the critical value of equipment records, secure parking controls, and fast reporting when commercial vehicles disappear. Over in the less-than-truckload sector, XPO just blew past Wall Street expectations with record-breaking second-quarter results. The Greenwich, Connecticut-based carrier reported adjusted earnings per share of $1.70, which was 23 cents ahead of the consensus estimate and 65 cents higher year over year. Consolidated revenue of $2.36 billion was 13% higher year over year and $85 million better than expectations. XPO's LTL unit recorded a 79.9% adjusted operating ratio, which was 300 basis points better year over year and 100 basis points better than management's guidance. The company says the industry is still in the early innings of a multi-year double-digit rate growth cycle and expects to capture rate increases that outpace competitors by 2 to 3 percentage points, given the investments it has made to its service offering. July tonnage is up more than 6%, and XPO now sees a path to annual operating ratios in the low 70s, or better longer term. Finally, LTL carrier Saia delivered better than expected quarterly earnings, but sent investors running for the exits with softer margin guidance. Shares were down 12% in midday trading Thursday after the Johns Creek. Georgia-based company reeled in its full-year margin outlook, now expecting to hit the lower end of a guidance range, calling for 100 to 200 basis points of year-over-year improvement. Saia reported second quarter earnings per share of $3.51, which was 84 cents higher year over year and 12 cents better than consensus. Revenue was 17% higher at $957 million, with both tonnage and yield increasing by 8%. However, the addition of new service centers has been a drag on margins. Since 2022, Saia has added 33 new locations and expanded or relocated another 25 terminals, increasing its door count by 25%. These new facilities still trail the company's legacy network, with operating ratios in the low 90% range.
So Julie, I take it that a lot of Saia's challenges is really investment in the future. They're investing in their network. Wall Street is a little brutal to a company that's making investments. They should reward them, should they not?
Well, yeah, and their revenue was still 17% higher. Their tonnage and yield increased by 8%. So it really was those new 33 locations that they have, to your point, invested in the future that were kind of a drag on expense and margins.
A lot of operating leverage in the business. Seems like an opportunity more than a problem.
Yeah, and it's still an OR in what, 90, near 90, 91.
Yeah. I mean, it is like the roundup of LTL rail earnings is absolutely pretty remarkable. We talked about some of the LTL. I mean, XPO hovering around 80 OR, like that's a pretty remarkable number. Revenue
up 13% year over year. LTL OR of 79.9. Yeah.
Amazing.
And he quoted sort of the same thing we're hearing from everyone, which was in the Morning Minute. We're still in the early innings of a multi-year double-digit rate improvement. So July tonnage, they mentioned, was already up more than 6% as well, and that they think they'll be able to get to a low 70s OR.
Wow. I mean, look, Old Dominion, we've talked about it before, is making everyone look not as great. It's like I said, it's the star pupil that even when you are getting the high grades and you're so proud of it, because I was never a great student, I would get an A. And then I would be like so excited. And then my friends, Zach, would get an A+. Of
course, Zach.
Like, come on.
Well, yes. Well, yeah.
What are you saying?
I'm saying that doesn't surprise me of Zach. And I also probably think he wasn't quiet about it when he got a
yeah, I mean, he was very proud. He's a nerd. He's a much better student than I was, but he would. I'm talking Zach Strickland. He's one of our market experts at FreightWaves.
Head of Freight Market Intelligence. Yeah.
So he would, he and I went to high school together. He provided a lot of help to my homework. One time I beat him in a grade. I had not studied, and I had a failing grade in chemistry, and I had to pass this class. And so he and I spent a weekend on a boat, just like cramming. He was teaching me chemistry. We're riding on the boat and the jet skis. And I came in, and I got like a 97. I think he got like a 92, and he was so pissed because I came in with a failing grade and I blew it out of the water, and he didn't. And
I also love that your idea of cramming is studying on a boat and riding jet skis.
Of course it was. I mean, this is the way life should be. As a teenager.
Yeah, on a boat, right?
On a boat, riding jet skis.
This is really tough. Most of us cramming, we're like locked in our quiet room with you.
Like I had to cram somehow, and I need the stimulation. I was never a good student because I can't sit. I don't test well. I mean, that's sort of an excuse for being lazy at times, but I just, I was just not a great student. And I found better to just show up and do my thing and not spend a lot of prep time doing it in class. I was
not ever much of a studier.
Whenever I did show up, I did what I had to do. So things haven't changed. All right, we'll be right back after these messages. We're going to talk deep about this earnings season. Stay with us.
The drivers, dispatchers, mechanics, and crews who keep the world moving deserve tools that work as hard as they do. That's what Samsara builds, technology for safer, more efficient operations, made with the people who do the work. Samsara, built with operators for operators. Learn more at samsara.com.
world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D to keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
So Julie, I missed you guys yesterday. I bought a paper. I bought the Times Free Press,
I read
the local institution. By the way, the owner of the Times Free Press, you could say the founder because effectively he was the one that built it, ended up basically building what became the New York Times. His family, the family owned the Times, the Chattanooga Times is the family that still owns the majority or controlling interest in the New York Times. So a lot of history. That was what I was doing when you guys were on air. I understand you guys had some technical issues yesterday.
Yeah, the content I think was excellent. So we were on site at the Univar carrier kickoff meeting. So really great attendance, really cool event. Love that they chose Chattanooga to have this event at, and actually got really positive feedback from everyone there about enjoying being in Chattanooga and loving it there. The Univar folks as well as the attendees.
Except
So
we
that
had,
made
I
me
guess you
happy.
had power problems.
We had some issues at the actual venue with
Did the whole venue
some
go
internet
out? Power
speed,
went
and
out?
then at the end, yes, power went out and the entire hotel dark. Like it went dark, like not just
What
the
happened?
stream went out. I
Just
don't know.
something. Well,
It came
maybe
back
the
on pretty
Times Free
quickly,
Press should be
but,
reporting on this. The big city loses internet, loses power. I imagine that the power is probably driving the routers and the internet.
It was driving everything. Yes.
Yep. So unfortunate. We are sorry about the technical issues that were on FreightWaves Today. I'm glad to be back. Man, what a jam up set of earnings in terms of what's happening.
Yeah, let's talk about CH, Robinson.
Yeah.
So revenue of 4.9 billion, which was up 19.3%. And then what I found the most interesting is, unlike some of the other logistics earnings we have talked about, truckload line haul rate charged to customers was up 25.5% year over year, but cost per mile was only up 4.2%. So they were capturing some spread in their margin in a tightening market, unlike pretty much all of the other brokers that we've seen report. They also, of course, noted headcount down 10.8%. So they're continuing to just improve significantly on how they're operating. It sounds like obviously the earnings did talk about in a very careful way some of the ongoing litigation and judgments recently and concerns about
that is definitely the overhang, right?
Right.
Like, and they have to be careful because they have to tell Wall Street what Wall Street needs to hear for reassurance, but also be careful what they say because anything can and be used against them in the court of law when you're dealing with a civil. This is, it's interesting because people are like, well, you have the right to a right to a hearing, presumed innocence. That is not how civil courts work. We're going to get that. Matt Leffler is here later today. We're going to dive into all of these set of lawsuits and issues later today. Matt's got a perspective that I think is pretty interesting on the actual case, specific case in Texas that has gotten all the attention, the lupus case, where he's going to talk about his perception on whether that gets thrown out on appeal. And he's got a real strong perspective. Stay around for that later in the show. Matt and I are going to dive into it. But we have a great treat. This is earnings season. This is an opportunity to talk to the folks that are actually moving the freight. And our first guest, we have Seth Runser. He is the president and CEO of ArcBest, one of the most storied LTL carriers, if not overall transportation carriers, has been around for a long time, for decades upon decades. Well pre-regulation, is now one of the few survivors of pre-deregulation that's still around. Seth, welcome to FreightWaves Today.
Yeah, thanks for having me, Craig. I appreciate being on. Sorry about those technical issues. I think we got them resolved.
It gave us the opportunity for Julie and I to catch up on, by the way, technical issues are a part of putting on FreightWaves Today.
Live TV is, yeah.
Live TV has its own set of things, so you're certainly excused on that. But let's talk about an area that you don't need an excuse, is your earnings. You guys are absolutely rocking and rolling. How does it feel to be CEO of a business in this climate when, you guys are putting up some really impressive numbers compared to historically how this market's been?
Yeah, it feels great. So you think about our performance normally sequentially from the first quarter to the second quarter. We improve about 350 basis points. That's really just the seasonality. The first quarter is always kind of the weakest. And we improved about 650 basis points within our asset-based operation. And then asset light saw a meaningful step up as well. So really proud of the team for them executing. It's a combination of factors when you think about everything that's going on with supply, demand. We're starting to see some early signs there. And then just what we've seen in the marketplace as customers are navigating all the disruption and complexity. They're really turning to those trusted providers that have 103 years of experience like us. So it's been a great feeling to get out there with earnings this week and spend time with our people talking through what we were able to accomplish together in the second quarter.
So Seth, let's talk about demand. You talked about demand. It feels like it's recovering. You're seeing signs of recovery. That is I would say in many ways, a lot of folks have not come in with conviction about demand. I think everyone recognizes that this is a capacity-led recovery. I don't think we dispute that. I don't think you dispute that at all. But let's talk a little bit about the demand side. That's an intriguing perspective that's different than what a lot of people believe is happening.
Yeah, I think demand, it's kind of in the early stages, I would say. We're not anywhere near like a mid-cycle or even an upcycle. It's really supply driven, like you said. That's really what's driving a lot of the things. So customers are trying to navigate as truckload capacity tightens. They're looking to logistics companies like ArcBest to help them navigate all those different disruptions. And we saw that come through in results, which was great. But we are seeing some early signs. It's good to see that PMI has been in expansion territory for the past 5 to 6 months after 4 years of it being depressed. But what really encourages me is our pipeline continues to be strong. We continue to have great conversations with customers. I feel like as that truckload capacity tightens, it kind of turns the light on, hey, we want to partner with companies we know, like, and trust that can actually navigate this with us. And that's what's been so impactful throughout the quarters. Our pipeline's only strengthened, but I wouldn't say it's robust demand yet. I think it is supply driven, like you said, but we are kind of seeing some early signs, especially as we've seen some of this more truckload rated freight kind of come into LTL. Very, very small amount, but we're starting to see those early signs of those plus 10,000 pound shipments making their way back into our network, and they just work better in an LTL environment. So, so I'd say we're early stages, but yeah, definitely supply is what's driving a lot of the results that you're seeing out of all the carriers who have announced this week.
Seth, we've been watching the LTL. We know that LTL recovers a little bit later than truckload typically does. You need tightness in the truckload market because shippers take advantage of direct point-to-point. It's not being handled through a dock network. When they can consolidate, and then when the freight market tightens, a lot of that LTL volume, as well as in the early parts of the cycle, they're building out larger truckloads because of larger volume segments. We only recently, Cass's shipment index, which is more weighted to LTL than it is truckload, is reflecting the fact exactly what you're seeing. Do we think that we're well past the point where this market truly is recovering from a demand side?
Yeah, I think we're still in the early stages of the market recovering from the demand side. There's still just, if you look at historical averages, and like you said, we've been around a long time, so we've seen a lot of cycles. When you look at a lot of the kind of subsectors within that, there's still weakness in a lot of different places, but there's also bright spots in a lot of places. I talked about it on our earnings call the other day. The data center build out, we're seeing a lot of demand there. Customers who are shipping, ATVs, we're seeing a lot of demand there. But there's other areas like apparel that we're not seeing demand. So it's uneven, I would say. So I think as demand strengthens, that's going to ultimately improve results for everybody. But the way we've built this company and transformed over the last 10 years is we're an integrated logistics company. So we can go to market and we try to say yes to our customers, regardless if they're looking to move truckload to LTL or go to a managed solutions or they need a more premium service. That's really what we've designed this company to do, is say yes to our customers no matter what's going on in the supply or demand environment.
Yeah, congratulations on a near 90 OR on your asset portion of your business. But I do want to talk a little bit more about that asset light part that you just alluded to. So 28% revenue increase, 15% increase in daily shipments, revenue per shipment up 11 to 12%. So it seems like everything is heading in the right market. Are you feeling the capacity squeeze on the other side of that? How has sourcing been?
Yeah, I think sourcing has been good. When you have the history that we have, we build long-term partnerships with a lot of our partner carriers, which is great. So I'm really proud of the team and the execution. If you look at what happened in asset light in the second quarter, we produced a little bit over $6 million in operating income, and when you compare that to all of 2025, we only made $1.5 million. So that shows you the progress on all the initiatives that we outlined at our Investor Day last September in New York City. It really comes around to profitable growth, making sure we're growing with the right customers, making sure we're efficient with our resources, and make sure we're partnering with companies that trust us and we trust them to haul our customers' freight. And that's been impactful. So with all the partnerships we haven't really felt the capacity crunch too much because, like I said, the way we've built this company is find a way to say yes. And we have a lot of different partnerships which allow us to do that.
So certainly a culture of trust across all of the business units. Would you talk a little bit about the decision to have Molo, Panther, those other brands move under the ArcBest name?
Yeah. We went to market as an integrated logistics company back in 2017, and we've transformed. And we've done some of that through M&A, some of that through organic investments, and that really came from customer feedback. They were telling us, hey, we don't just have LTL. We have truckload, we have managed, we have expedite, we have all these different solutions. So that really is what we started to do. So the announcement a few weeks ago where we consolidated the brands underneath ArcBest, that was really about simplifying our brand strategy to say, okay, we are ArcBest, that integrated logistics company, and we have solutions underneath, whether it be truckload brokerage, LTL brokerage, any of those areas. That's really what it was about, was simplification and going to market as one ArcBest. And we really heard a lot of that from our customers, from our employees that said, hey, why do we have all these sub brands? So this is really the next step in that evolution to make it simpler and easier for our customers to access all of the solutions that we have. The feedback I've heard from customers and employees alike has been very positive, kind of this long overdue scenario. So I've been really encouraged by everything I've heard from the team and from our customers since the announcement came out.
Seth, you guys have been around since 1923. You've survived multiple world wars. You're coming out of the first the 1920 pandemic. You guys have had a storied history. One of the things that we've talked about when you guys made the announcements on the Molo and Panther brand consolidation, we'll call it, was the fact that the culture of ArcBest is this legacy, very structured organization, is one of the reasons you're so successful. And we're big fans of history and your history in particular. As a pre-deregulation carrier, Molo had a very different culture. It was a Chicago Central, the Silvers, Andrew Silver, sort of a freight bro, if he from Central Casting. When that announcement was made years ago, from where I stood, it seemed like a very strange, or at least a counterculture to the typical ArcBest culture that we know. What is that part of the reason to rebrand, is to change the way that business operates, or what has that been like in terms of the overall integration into the overall ArcBest organization?
Yeah, so I'll just take a step back to a few years before the Molo integration. So before we even announced the move. So really what we were hearing from our customers was, hey, we really trust you for LTL. You're doing a great job with Panther and Premium Expedite, but your truckload offering really wasn't as strong as it needed to be. So we had our own truckload brokerage at the time. It was probably $300 to $400 million, a lot of transactional type customers. But what Molo brought and what was really attractive about them was, A, it filled a strategic gap for us because our customers were asking for truckload services. And B, what they built was really a service-first mentality. And that's what ArcBest is known for, a premium experience for our customers. And that's what made it so attractive to us. So we got to fill a strategic gap. They believed in being customer-led and servicing customers with excellence, and it just really fit perfectly. So as we've integrated, really what it's done is it's expanded the capabilities, because all of our customers, we have about 30,000 active customers, they all have truckload needs. It's their biggest spend. So by having a really strong offering in what we purchased with Molo, it only strengthens those relationships with customers. And we're kind of past the integration phase, and I feel great about the progress we've made, and the team's done an excellent job. And I'm really excited that we hired Mac Pinkerton to come in and lead our asset light operation. He led CHR's NAST product, and that's the largest broker in the United States. So he's really helping transform us into what we can ultimately be. And I feel like we're in the second or third inning. We got a long way to go to get to where we ultimately want to be.
Well, that alumni network, the C.H. Robinson alumni network, there's no denying that it is persistent across this industry. They, particularly out of Chicago, that Chicago Central office, the old American Backhaulers office, has written a lot of the success of Chicago, Molo being a Chicago-based broker. I would argue third or fourth generation, Julie, in terms of brokerage. If you sort of think of the evolution of freight brokers, sort of the American backhaulers, U.S. Express was a big American backhauler, C.H. Robinson
Right.
Central. This evolution, I think I would argue that Molo is sort of the fourth generation, maybe.
So what's
Chicago.
the third?
Well, you have Echo. Echo
Okay.
is sort of that third. You Command
Yep.
You could argue
Okay.
Command.
So it goes from backhaulers to the
yeah, I
original
think
CH to then some of
backhaul,
those
CH,
expansions.
Command,
Maybe even Coyote, that group.
Echo, Coyote would be maybe fourth,
Third,
and now
yeah.
we're third or fourth. But you're in this sort of fifth generation, and really Chicago has become such a high concentration of freight brokers, its own culture. Like when you describe to somebody in freight about the Chicago freight floor, everybody knows what we're talking about. What is going to change for you guys with Molo becoming an ArcBest? I'm sorry, I haven't had a lot of sleep this week, so if I fumble my words, it's. But what is the goal here in terms of what can customers expect that's going to change? Where the investments going to be made?
Yeah, to me, it's not a matter of what's going to change. It's what's going to strengthen. And that's really what we're trying to do with this brand, is we're trying to simplify our approach to the market, make it easier to access our solutions, and ultimately combine all the capabilities that we have as one ArcBest into what our customers can get access to. So we really focus on three strategic pillars: growth, efficiency, and innovation. And I feel like across each of those pillars, it's going to only strengthen with the brand. We don't have to spread out our advertising dollars among 4 different brands. We don't have to have different teams and different swag and all the different things, right? So ultimately, we want to be that integrated logistics company. And we feel like this is just the next step in the evolution of that strategy that we've been embarking on for over a decade. And this change is only going to strengthen and simplify and make us move faster in the market that we live in today.
Seth, if you're looking for a place to park advertising dollars, just call us up. Media is a tough environment. You think trucking's hard? Media sometimes can be a little harder. We'd love to talk about that. Panther 2, also a storied name. Not a legacy name in terms of the history of ArcBest, but a name that if you know Expedite, Panther 2 has been a market leader. You guys acquired it almost, I think, 17, 18 years ago.
Yep.
Is it going to be ArcBest Expedited? Like, what's the future of that business?
Yeah, it's also going to be ArcBest, and then underneath ArcBest, the logistics company, we describe it as premium logistics because they don't just do expedite. They do temperature validated, they do Department of Defense. It's kind of that premium logistics. Shipment cannot fail. So it's not just, hey, we're going to shut down a product line and we got to expedite that shipment. It's become so much more than that, and that's what makes me really proud. So I think what's going to happen is it's just going to continue to simplify exactly what I talked about. And what's been interesting is as we've had customer conversations around the branding change, they're like, well, we already thought Panther was ArcBest. And that's because it was. We're all one ArcBest team, right? So this just makes it a lot clearer to say, hey, ArcBest is a logistics company, can offer all these different services. What is your problem? What is your solution that you're trying to find? Because we'll find a way to say yes, whether that's truckload brokerage or managed solutions, any solution. We're able to say yes because that's really what builds a trusted relationship over the long term and why we've stood the test of time.
So Seth, I don't think we can talk about premium logistics or integrated logistics offerings without talking about technology. So I think I recently read that you just launched a new product called ArcBest View. Can you tell us what that is, what it does, and why now is the right time to roll it out?
Yeah, I think about ArcBest View. It's something that we started building probably, I want to say 3 or 4 years ago. And really, when you think about our traditional customer platform, it was our website. It was arcb.com. Well, that was really built based off of an LTL environment. So, because that's most of our history until we've made this transformation over the last decade. So, what we heard from customers is they wanted a single source of the truth. They wanted to go to one place and find where they could track, book, quote, optimize their supply chain, get everything. And the old experience that we had, they had to go multiple places to navigate that. So we started building that platform side by side with customers from the very start. And that's what I think is impactful, is because you can build a great product, roll it out and be like, hey, I hope everybody likes this. But if you build it side by side with partners we've had for 10, 20, 30 years, they're going to tell you what's going to work. And that's been very impactful for us. So really what that platform is, some people have described it as, hey, it's just a refresh of arcb.com. And it's not. It is a completely new digital platform that I think is differentiated in the marketplace because now you can track, book, do all of those things across all modes. And that really is differentiating for us. We have about 2,500 active customers signed up for it so far, and the feedback has been really incredible. And that's what makes me feel so good. As we roll out further enhancements and continue to refine, we'll start getting more customers signed up for it. But a lot of customers are saying, wow, this is the best tool I've ever used. I have now complete supply chain visibility, which adds to that simplicity that we've been talking about, right? We wanted to simplify our customer-facing tools so they can navigate everything that's going on in their supply chain and not have to pick up the phone and call. They can self-serve or they can pick up the phone and call. So I'm really proud of the team that built that, got it out there, and we'll continue to make enhancements as we move forward.
Seth, what are you guys doing in Arkansas that is enabling these old school legacy leaders? We covered JB Hunt extensively on the show. They're killing it on their intermodal business. You guys are, you completely transformed the business from an old school, sleepy, sort of regulated trucker into one of the most dynamic logistics companies Is there something special specifically about Arkansas that enables? I mean, when I go through the list, you guys were number 12 in 1980, according to Transport Topics top 100. And I go through the list of those carriers that are still around. Most of those carriers, United, Parcel, Roadway, Consolidated Freightway, Yellow, McLean, Ryder, Truck, North American Van Line, Spectre, Red Ball, PIE, Allied, Smith's Transfer, Arkansas Best. You guys have been around. What is going on down there?
Yeah, well, we always the way we position the company, like I said, we're customer led. And at the end of the day, if you listen to your customers and design solutions around them, that's what's going to stand the test of time at the end of the day, right? So, and we also, leaders before me, present leaders have built an amazing culture at our company. And that's really, if you look at Centurion companies that have been around more than 100 years, really the two things that stand out. It's a great culture, and it's the willingness and adaptability to change. And that's what we've done throughout all the time. So we're not thinking about next month or this quarter or next quarter. We're planning 3, 5, 10 years out. That's really the way we focus. And we always say internally, we have to focus on disrupting ourselves, because if we don't, someone else will. So I don't think we're that company that you described, the old school company. We're focused on technology, we're focused on AI, all the different things. But at the end of the day, it all comes back to, where does the customer find value? And if you stay close to your customers, you have great people, you're going to deliver some amazing things in the future.
I think it's an exception, Seth, to the rule. I mean, the reality is that you guys deserve a lot of credit for going through all of these iterations. I mean, we're in a new cycle. We're in a new market, it feels like. I mean, Matt, Dad, you've talked about the fact you've been in trucking since the 1960s. Mm-hmm. You talked about the fact that this freight recession and this market is completely different than any that you've experienced in your lifetime.
Right.
But you guys have made it through another cycle, Seth. There must be some formula for that has just enabled you to thrive so well, that I think is really intriguing, because so many of your other pre-regulation competitors just never made the transition.
Yeah, I agree. And a lot of that is just the paying attention to what's going on, focusing on what matters the most, and making the right decisions with integrity at the top of your mind. So I took over ABF and ran our LTL division in 2021 at the height of the pandemic. And I swear every time I picked up the phone, it was like a new thing was going on. The East Coast ran out of fuel because the pipeline got hacked, or you couldn't hire drivers, or you can't buy trucks anymore. The list goes on. And then a 4-year freight recession. So it's just, you have to know in the back of your head that disruption is the new normal. And if you prepare and build the company on a great foundation, and you're always focused on the future, good things will happen. And that's really what we've done at this company and what makes us so special.
Well, Seth, thank you so much. I mean, an institution.
Yeah.
Like, I love talking to these. Look, I'm a big fan of history. I'm building a history museum in Tennessee. We'd love to have be the
that's great. I'll
ArcBest
come
terminal.
down. Yeah.
Be the largest indoor miniature transportation museum in the world. If the Smithsonian was doing transportation across all modes, it would be the Smithsonian. Real excited about that. We'll have to have you out there. Also, the International Transportation Hall of Fame, we're going to announce that. That will be there as well. Certainly someone along the tenure of ArcBest deserves that.
Yeah.
I mean, amazing. I love these businesses that have seen so much, Julie, so much history, and yet are talking about new technologies and doing it right.
Yeah, I mean, I think it just shows you that in business and in life, probably the most important skill you can have is adaptability.
And you got to survive. You got to be
like
there.
a coyote, right? That's why they're everywhere, because they're the most adaptable animals. Did you know that? I watch Wildcats with my son.
Except
they
when
are
in my yard.
No, they are.
They figured out how to do it. Anyways, well, Seth, thank you so much for coming in to FreightWaves Today. Would love to have you back, and best of luck in your journey as you continue to build out your technology. And we know that you've got a lot going on over there. And congratulations on a great earnings. And we look forward to reporting next quarter. We'll hope to have you back.
Yeah, I appreciate you having me on, and I'm welcome back anytime. I enjoyed the conversation, so thank you so much.
Appreciate it, Seth. Amazing. Like I said, I love history. I love these transportation providers that have been around for all these years. Just don't get enough. And there's, one of the things, that I think is true is so much of this industry is tribal, and not enough stuff is being talked. Like, there's not enough documentation. There's no great books on the history of it. I wrote one, but it's one of, very few in terms of the history of it. And I still was scratching the surface, but there's just so much history in this industry.
Yeah, and I think it's also because maybe people don't write more about it because once you're in it, you stay in it, I feel like, because anything else would
And you
be
don't get out.
boring, and then you don't get out. And
Yeah.
and I think it's easier to get perspective when you do get out, right? To maybe write about it. But
I
agree.
was very fortunate. I grew up with a true trucker. My dad, we would take road trips, and he'd pass a trailer of a company, ArcBest in those days, would have been called ABF. But he would point out the story, the founders, and the everything from where the company was founded. He had met the owners, and then look, I not just name the company. And I learned so much history, and that's one of the reasons, frankly, I built FreightWaves, is because this ties into all of the great history that we have in this fantastic industry.
Yeah, one thing that you're talking about is really the cycles in this industry, and companies that are on top of the industry about every 5 years changes relatively fast. And it's because the market changes, the technology changes, companies change, and you have to continuously evolve your company. And about every 5 years, it's changed a lot. And that's the reason there's a lot of history here, and a lot of people still not in this industry because they didn't change fast enough.
A lot of grit, and sometimes
Yeah.
you go a direction and it doesn't work out. You take a lot of risk. You go in a direction.
Hey, I tried a lot that didn't work. Some did work.
I know. I was gonna go soft on that, but since you brought it up, Variant is a great example of a mistake that was made when you guys really pivoted your business into a digital first deal. And the whole story on these legacy operators is that a lot of it is just adaptability. You want to be there long enough to be around.
Yeah.
We're gonna get into that later in the show. We have David Parker, my uncle, his stepbrother, to talk about the history of trucking and what is going on at Covenant, another company that's transformed its business model. We'll be right back with message. We're getting into earnings. John Kingston heard the word oil and diesel, shows up. He's going to be right here to talk about it.
we're actually going to go right into the Sonar update. Okay, in today's Sonar update, I really want to talk about 5 key pillars that I'm seeing happening in the market, and then back those up with Sonar data and some information from recent releases we've been tracking and we'll continue to talk about on the show as well. So the 5 pillars are: 1, capacity is leaving the market. We've been talking about that at length, and that carrier exits continue with regulatory enforcement and the FMCSA and DOT revoking invalid CDLs, as well as shutting down non-compliant CDL schools. The second pillar is rates are strong and durable. We're continuing to see spot rates particularly remain elevated, and contract rates continuing to rise. Demand is steady, even though it hasn't been increasing, and is the third pillar. The fourth pillar is shippers are moving towards asset-based and dedicated capacity. We've seen that in some of the earnings calls, and that makes a ton of sense based on the current regulatory environment and liability concerns. And then the fifth pillar is that the tightness in the market and lack of available capacity, as well as the rise in rates and a healthier freight market, is making driver recruiting significantly harder. So to back that up with a little bit of evidence, both from Sonar and earnings, so pillar 1, capacity is leaving the market. We can see that in the Sonar Truckload Rejection Index, STRI.USA, on a national level at 14.36, which is still well above the 6-month average of 10.9. We're seeing especially high continued tender rejection levels at 23.5% for flatbed and 19.46% for refrigerated. So those two are running even hotter than the overall national average of all rejections, even though they've all cooled a bit from the early summer peak. And I'll talk a little bit more about why I think some of that is happening in one of the other pillars. But really, we've seen elevated rejection sustained over months, not just a spike. So I think that that's really good evidence that capacity is not self-correcting quickly. To talk about some earnings that also back up this thesis of mine, Knight-Swift specifically, their management in their call attributed rapid tightening
to supply-driven dynamics, with spot rates exceeding normal seasonality and tender rejections reaching levels that they've not seen since 2021. And that's in their own data, their own tender rejections, not just Sonar. We talked about that showing up in Sonar data as well. They also specifically called out the FMCSA and DOT efforts to revoke invalid CDLs and shut down non-compliant driving schools to remove some of that low-cost, non-compliant capacity from the market. Werner also pointed to regulatory pressures removing shadow capacity as ELD providers exit the market alongside driver and CDL school removals. So rejections aren't just elevated, they've stayed elevated for months, and that's backed up by our data as well as to the largest public carriers. Pillar 2 is rates are strong and durable. So the Sonar evidence is that the NTI, our truckload, national truckload index, tracking spot rates has remained incredibly high. It had a bit of a slump, which is still elevated in mid-June, but it's beginning to rise again. Even when you back out fuel, which makes really the key durability check to ensure, that the rates aren't only rising based on fuel costs, we continue to see a strong spot rate, and we're not seeing those diesel prices and that NTI spot rate necessarily move in tandem, which to me speaks to the fact that spot rates are remaining elevated and moving based on lack of capacity and willingness to pay, not just based on diesel rates going up. Rates can rise even when diesel is falling, and we see that in the data, and you'll see that in the graphic. Pillar 3 is demand is steady, even though it's not increasing. In Sonar, you can see our OTVI or our STVI, either index of volume, our volume index. It's remaining relatively flat to modest rather than surging. And then when we look at our actual Sonar tender volume index of accepted volume, we can see that that's remained steady. Acceptance is going up a bit, but I believe that is from new higher contract rates starting to come into play, leading to a little bit less rejections and better compliance for tender acceptance as contract rates have risen and new contracts have been put in place. Some evidence of this is that Knight-Swift's own CEO called this cycle supply-driven rather than demand-driven. You can see it in all of our data. You can see that intermodal, like for J.B. Hunt, their volume rose attributed to rising fuel cost and constrained trucking supply, which is pushing people towards rail. So where we are seeing the demand increases intermodal, but again, I don't believe that's from massively increased volumes across overall demand. I think it's from mode shift as supply has left the truckload market, forcing some of that volume onto the rails. The fourth pillar is shippers are moving towards asset-based and dedicated capacity. This one leans more into earnings commentary than Sonar data, but I think that it absolutely makes sense in our current regulatory environment with liability concerns. When we think about J.B. Hunt's earnings, they mentioned their dedicated pipeline was at record levels. They pointed to a tight driver market, regulatory pressures, customer demand for reliable capacity. So makes perfect sense. Werner, their CEO, Derek Leathers, said on their call that organic dedicated business is growing, not just with their first fleet acquisition, driving margin improvement, but as a whole. So plenty of evidence there. And then the fifth pillar is driver recruiting is harder, compounded by the regulatory environment. Again, I'm going to lean more on earnings and what we're hearing from all of those industry experts who we are talking to every day on the show. But Knight-Swift in their call again said, spoke to the same CDL, revocation and non-compliant school shutdowns commentary, that regulatory environment is shrinking the eligible driver pool. J.B. Hunt has spoken to the driver market tightening, leading to increased sign-on bonuses and targeted wage increases. They even flagged that as a potential margin pressure point going forward. We've heard it from a lot of our guests that recruiting has become harder. Drivers have more options in a healthy freight market and can chase higher pay. We're seeing some wage improvement for drivers as some have announced driver pay increases. So really, every one of these 5 pillars showed up almost verbatim in Q2 earnings calls from the biggest public carriers in the space. They're describing their own market in the same terms that we've been using all year as we've been talking about the market, and again, also supported by Sonar data.
Welcome back to FreightWaves Today. John Kingston, all I got to say is the word oil, and you just show up in my monitor. How are you, sir?
You're my boss. I show up no matter what word you say.
There is some truth there, but I also have magic words. John, you've been covering the earnings of all of these different players in logistics. Well, I want to talk CH because everyone's been watching CH for obviously, it's been the most targeted, we'll say, in terms of lawsuits. A lot of noise around the stock with the Supreme Court decision, as well as the lawsuit in Texas. What is the name of that?
Lupus.
Thank you, Lupus Superior. John, tell us about what you're hearing.
Well, so the earnings call was interesting. First of all, I predicted on X, on Twitter last week, that Dave Bozeman, the CEO, would not be allowed to talk about it because the lawyers would tell him not to. I was totally 100% wrong on that, and he talked about the case quite a bit. The call was sort of interesting because it started out, C.H. Robinson is just laser focused on this message about lean AI and all the impact it's having, which there's no doubt about it. Once again, their headcount was down, revenue and profits are up. So, obviously you can see where the impact of AI is in terms of per employee performance. But I mean, I have to kind of laugh because these are the same analysts who've heard the same message over and over again. I don't know. They're not. C.H. Robinson's job is to write news for me, but anyway. So it started by talking about that. The performance was solid. The financial performance was solid, but then yes, they did get into the case, the Dallas County case. In it, they repeated that they are going to appeal. Remember, and they reiterated a couple of times. It's been a week now, and the judge down there has not yet affirmed the verdict. So they're waiting on that. If she does affirm the verdict, they will appeal. At one point, Dave Bozeman said he expects that this process could take years. There were settlement talks. He would not go into what they were, but they rejected it basically on the recommendation of their insurers. They rejected that. And you heard this on several calls, not just C.H. Robinson, but you heard that insurance costs are inevitably going to go up, number one, and everybody will be looking for high quality capacity. So that is the message that really has come through in the wake of not just Montgomery, because this was the first earnings cycle since Montgomery came down, but also since the nuclear verdict. So there was quite a bit there. The other message that came out, I know you said David Parker is going to be on. Their earnings call was yesterday. Our story on it is going to go out as soon as this is over. He just got on, and most of that call was handled by James Grant, who's the CFO. But when Mr. Parker spoke, he just said, "This is unique in my long history. The structural change in the market." Several people on several other calls said the driver. I guess I was about to say driver shortage. The market for drivers is definitely tight, no doubt about it. They all had praise for the DOT and actions that the Trump administration has taken. So that was a kind of a consistent message through the calls that I've done.
John, it's at John Kingston if you want to send your hate mail about the driver shortage comments, not at Freight Alley, just in case the drivers have strong opinions about that. So, John, by the way, Trip Grant, James Grant, I think is the official name. I went to school with the kid. Zach Strickland, Trip and I all were in the same class here in Chattanooga at Macaulay. So we all went to school. It's cool to see two of the non-truckers. I grew up in it. I didn't have a choice but to be in this industry. But both Zach and Trip are in this industry. When we think about C.H. Robinson, did we learn anything new? I mean, obviously they're talking about appeal. It wasn't a shock. They're talking about AI. You talked about how persistent this is. Wall Street sold off. We're down 20% in the last 5 days. But what did we learn on that call, John?
I don't know that you learned much. There really wasn't much that they said that they hadn't said in their statements after the verdict. I will say I've been sort of checking every day. And then my guess is this would not come until the judgment was affirmed to see if Moody's and or S&P Global puts them on some kind of credit watch, because they got to essentially if it's a firm, they've got a $600 million charge that they've got to account for somewhere. And Jason Seidel of TD Cowen mentioned that too in his post-earnings call report, that there very well may be a charge taken. Wabash National took a charge. They had that gigantic St. Louis verdict over $400 million. They eventually, and they did take a charge. I don't know if they took the full 400, and then they knocked that down on settlement. But that settlement was still over $100 million. They had to take a charge on that too. At a certain point, this does become real money. I think that now it just seems so far from when they're going to have to write a check. You had a verdict last week, still hasn't been affirmed. You started the appeals process. So you wonder how much that's going to impact their bottom line. But someday, unless the whole thing is tossed out, there will be a charge. Let's remember, this is Texas. The Texas Supreme Court eventually got a hold of that big Werner judgment a couple of years ago and knocked that down to zero. So I can't imagine that the C.H. Robinson lawyers aren't looking at that.
Look, I think every defense attorney in the country and every compliance officer is thinking, God blessed Texas Supreme Court, hoping that this thing gets disputed. If you're running a broker, you got to do it. I got to ask you, when you guys were public, when you were running the public company,
Right.
you have a big, massive lawsuit risk that's there. Your Wall Street, I think maybe because these cases are so big and the lawsuit is so big that C.H. Robinson doesn't have a choice but to talk about it. How did you guys handle that in terms of discussing Wall Street? Because you have the plaintiff's attorneys are everything you can will be used against you.
You had to watch anything that you said, because like you said, it would be used against you. It's hard to defend yourself in the public eyes when the other attorneys are trying to find something that you said, one word that you might have said wrong, and they would use that one word to build a whole case around. The judges today are letting a lot of these people run.
You're talking about plaintiffs.
Plaintiffs.
Yep.
But the judges are letting them run to find anything wrong. It doesn't have to be anything that really affected the accident, but they're letting them find something that's wrong in maybe hiring or something that the company's done or anything to create a judgment against them. And it's really sad. This industry is going to change a lot if tort reform doesn't happen. And it's got to happen pretty fast, because if you look at almost every major trucking company out there, they're dealing with this type of stuff, whether it's higher insurance costs or whether it's their own balance sheet, it being in jeopardy.
I think Citibank's quote was that this lawsuit, the C.H. Robinson lawsuit, that the award, that nuclear verdict, is an existential threat to brokers and the business model, John.
Two things. Everybody tends to get focused on the dollar number, understandably, but there are two other things in here that are probably even more scary for brokers. Number one, this was not some fly-by-night carrier. They had a satisfactory rating before the accident. Even after the accident, they had a satisfactory rating. The other thing is that the jury found, and this gets into whole sort of independent contractor law, that the driver was effectively an employee of C.H. Robinson. And their argument is, we've never employed a driver in our life. And so this is not just, the issues here are not just a lot of money. Those issues have legs. And so you kind of got to watch that too in any kind of resolution. Let's remember something that a few weeks ago, the Transportation Intermediaries Association, the TIA, which is the brokerage trade group, put out, I guess, a formal request for a rulemaking from FMCSA on what constitutes appropriate behavior on the part of brokers. So the C.H. Robinson point of view would be, we hired a guy who's solid. I think he had 200 power units, and he had a satisfactory rating. And now we're getting stuck with a $600 million verdict. What else were we supposed to do?
But I think it goes down, John, this idea that, Matt Leffler and I are going to get into this later today on Freight Expectations, and Matt is he's an attorney, transportation attorney, particularly transportation law, loves these Supreme Court decisions, and these decisions that ultimately is going to get appealed. The whole thing, as far as he can tell, is the definition of an employee. And in this particular decision, the jury decided, for whatever reason, that the driver that died, he passed away, was an employee of C.H. Robinson. That seems and we're going to get into this later today, but it seems like everything rides on that one issue. And if somehow that gets held up in the court system, if the courts and all the way to the Supreme Court, I imagine this would go all the way to the federal Supreme Court if this plays out, why we're talking many years. If somehow Texas upholds it, this puts all of the independent contractor services, including Amazon, FedEx, all of these different companies, puts the entire business at risk, John.
But let's remember something, though, about this driver. He was a W-2 employee of Lupus Superior. So it'd be, I think it'd be a little more complicated if he was an independent owner-operator that got hired by Lupus Superior. And then maybe, the whole question of independent contractor status, et cetera, might get a little more cloudy. But this guy got a paycheck from Lupus Superior. So that establishes that he's an employee. He got a W-2 every year from Lupus Superior. How can you be an employee of somebody else when that's happening?
I mean, this is in Texas. I can't imagine, my perspective, and again, I want to get into it, Matt Leffler. We're going to get into it deeper. Stay tuned for that. I can't imagine this holds up on appeal. I think it's going to get thrown out on appeal.
Yeah, but is the damage already done in their stock price?
Well, look, plaintiffs' attorneys read this. $600 million is just going to attract them that much more. They're like vultures. They smell it, they attack it, they want it, they taste it.
So, John, I could talk about this.
We have a lot to talk about earnings. We're going to have you back next week.
Yeah, I was going to say, final question, because we're out of time. Heartland, Werner, Schneider, lots of other earnings. Anything stand out in any of those to you?
Well, I didn't do Heartland or Schneider. My colleague Todd Maiden did that. I did Werner. I guess the thing that stood out is it was good. I probably, after all the talk of higher rates, I may have expected better. I thought one of the more interesting was TFI International. We tend to think of them primarily as an LTL carrier, and the fact is more of their revenue comes from LTL, primarily, a lot of it the old UPS freight arm. Their truckload did really well, and a lot of what did really well is what they call the specialty group, and a core of that is the old Desky flatbed unit that they bought. They're doing really well on that. A lot of AI-related work. Normally, I've been doing these calls for TFI for quite a while. The talk tends to focus in on their LTL operations because the ones in the U.S., the former UPS operations, have been struggling. But this call was interesting because there was a lot more talk about truckload, and clearly Alain Berdard wanted to talk about that. And anytime he talks, it's really entertaining.
Yeah, it's interesting because people have asked, how do you get exposure to flatbed? There is. Dasky was the only pure play flatbed public company. It is now a part of TFI. And look, if I were running the business, if I were running TFI, we're talking about a flatbed all the time.
Oh gosh, especially in this market.
So much sexier.
Yeah.
That's a big
the industrial
win.
economy is back. John Kingston will have you back next week to talk more oil, energy, and earnings. This rock and roll continues on. Right back with David Parker, the founder and CEO of Covenant Logistics. Stay with us.
You ever see yourself short on trailers right when demand picks up? Our friends at Premier Trailer Leasing can help you stay ready. With more than 70,000 trailers and over 40,000, trailers with 40 locations nationwide, Premier gives businesses flexible access to dry vans, reefers, flatbeds, and chassis when plans change. They're known for transparent pricing, quality equipment, and 24/7 in-house road care support. So you can get more than just trailers. You can get a partner that helps with your operation and keeping it moving. Visit them right now at premiertrailerleasing.com to get set up before your next big search.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D to keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
Welcome back to FreightWaves Today. It is Friday. We have a real treat. We have David Parker, the founder and CEO of Covenant Logistics. David, I have a habit of saying Covenant Transport, so I got to get.
I do too.
Old habits. Have you done this to any of your ever in investor calls?
Yes, I have.
So you guys just had your conference call. Congratulations.
Yep.
I understand this is the biggest revenue in your history.
Yes, yeah.
So what do you? I mean, obviously the market's helping that. What do you attribute it to?
I tell you, at the end of the day, it's what we started 11 years ago, and refocusing the company and getting into the various segments. You know, we're not into the OTR segment, very little.
Yeah.
I mean, we may have 100 trucks running in the OTR segment, and we have really focused on the 4 areas that we're involved in, which is expedited, dedicated, freight management, and warehousing.
Yeah.
And we've been going down that path for a while.
So that's obviously over the last 14 years, you've talked about just the transition of the company. It is a very different operator.
Yeah.
If you followed it historically, it's a very different operator than it historically has been. But there is something special about the way you guys have repositioned the business. What part of the business are you most proud of in terms of the progress that you're making right now?
Well, I tell you, number one, I'm proud of all 4 of them. If I leave one out, I'll get in trouble.
Love all your kids equally.
That's right. I love all my children.
We're trying to have 5 kids. It depends on the moment.
I love them all.
honest.
I love them all equally. But we've all of them have made some great headway. I look at our legacy dedicated that we had them all down yesterday for meetings, and they have just done a great job. I mean, they have turned that thing around so well. I'm proud of them. There's no doubt that the freight management, which is quote brokerage as well as a small management of freight, it's been tough. We went from doing great until you couldn't find capacity, and then our margins have squeezed, and so we continue to focus on that to make sure that we can either raise rates or find carriers that do it cheaper. And I got a feeling raising rates is easier.
Yeah, well, look, misery loves company, because every public truckload carrier that we've covered has had the one part of their business has struggled, and you can go through the list. In fact, I don't think we've covered asset-based carrier that's done well in brokerage.
No,
The
revenue
pure play
has been up for
brokers seem to
everyone
be.
in revenue
CH
has
is
been up,
doing
but
well
margin has been
despite all the
compressed.
noise.
Yeah.
RXO, we're going to hear from next week. I would suspect that they're doing well, but it seems like the asset side of the business, these logistics operations are there to serve the truck. Julie and I have talked about. Usually the truck is going to win out in terms of how you guys think about the business.
And that's interesting, because that is one spin. Ours really isn't. Our assets, keep in mind, we do no OTR. So we're very focused. So our asset side only handles about 0.5%
Wow.
of the broker freight. And
So why do you think it's underperforming versus some of the other businesses?
strictly because capacity rates
Got it.
have gone up faster than we've been able to raise
So you have
rates.
contracted business, that long,
It's
short side
about
of
it's
it.
about 70-30.
The spread of it's hard.
It's hard
in this kind of
It's
environment.
harder. Now, eventually, it's going to catch up.
I mean, we're still early cycle. I mean, Julie and I were talking earlier on this call. Every CEO's talked to. I think they all
using the
check
same
quotes.
words.
Yeah.
They read each other.
Yeah.
We're in the early innings. Do you agree with that?
Yes, I do.
Derek says that we're in the third inning. Where would you describe it?
Yes, I believe that we've reached first base. I use baseball analogies. So we hit the ball.
We're still in the innings. Okay.
That's right. We hit the ball last October. It's when the DOT really started focusing because of the August accident that happened in Florida that we're all well aware of. DOT took over in October. And to me, that was hitting the ball. And I believe we're at first base. I think that we've got a long runway.
You think it's a long, big stadium? We're in this.
I don't know if it may have been you all, to be honest with you, but whoever invented the term super cycle, I believe it. I believe that's where we're at.
Yeah, I think FreightWaves was one of the first to actually describe it.
I agree with that.
That world is set in because it's exact. I mean, there have been, people have used that term in the past. I think we described it simply because you have the setup. It's very unusual. I mean, the reality is that the driver constraint has always been the capacity constraint. It's interesting. You go back over the decades. Everyone talks about the number of truck counts. And I remember as a kid, and I'd listen to the conversations my dad would have about trucking. And a lot of it was how many trucks got produced because you couldn't count the drivers.
Yeah, that's right.
Now, over the last decade, a lot of the capacity constraints have been truck drivers, but the issue has been this massive immigration that has been unrestricted, and the regulatory environment has eliminated all the barriers to entry, has meant that we didn't have a normal cycle.
We didn't.
That's all gone away.
It's all gone.
And we talked about just the demographics and how all the fact that it is harder to recruit fully vetted, fully registered truck drivers today has made it more challenging.
Yes, and it's interesting. Who would ever remember the days that we're saying now? Boy, I'm glad. I'm having a hard time finding professional drivers.
Yeah,
I'm having a hard time getting drivers in the seat. But let me tell you, after the last 4 years, I will take that any day.
Yeah,
let that be my problem.
It's pricing power, right?
Pricing
That
power.
it gives you guys pricing power.
And it's not abusive pricing power. It's give me pricing power to be able to cover my costs.
So I'm going to ask you a question. Is there a truck driver shortage?
My son-in-law and I argue about this all the time. He had his own recruiting company. I say no. He says yes. Only thing I know is I need drivers.
Okay, well, there you go.
Yeah, that's all I know. I need some drivers.
I think the pivot has moved from driver shortage to qualified driver shortage. Mm-hmm. The drivers themselves, by the way, you need to send your messages to your son-in-law, Rob.
Yes.
That they, for those drivers that are upset about the term driver shortage. But I think even the drivers would agree that there is a shortage of qualified drivers.
Yeah.
That's a big piece of it.
Yeah. We need more of them.
Julie, when we think about this market and think about just what Covenant is known for, you were at U.S. Express, two of the largest team operations. When you were reading the earnings, what was your perception in terms of Covenant's performance?
So, I think certainly, you can break it out by revenue per tractor per week looked excellent based on my my experience. I assume inflated based on the amount of expedited freight and team freight you're doing. But I also noticed the theme that we're hearing from everyone else as well, that we're really working on increased utilization, increased profit, not any interest in growing fleets necessarily right now, more in likely shrinking the asset footprint. So that was sort of the theme that I noticed that I had read, not just in the Covenant earnings, but really kind of across the board.
It's different, right?
Yes, it is. And it's interesting. We took out 150 teams, trucks out of the expedited side in the first quarter. Now, some of that bit us in the second quarter because there's a lot of tail on insurance claims and some other costs that happened in December and January that you don't have enough revenue to be able to support it. And all of a sudden your fixed costs are not helping you as much as you would like for them to. But yeah, we took off. But I'm going to tell you, in my meetings yesterday, guys, because I know that we all sensed in the month of July a little pause. Whatever you want to call that.
We've talked about it.
It happens every year, though.
Every year.
Yeah.
Every year.
But do you think did you feel, because we've been talking about this pause, this slowdown, do you feel like this is a normal season calendar thing, or do you think it's unusual?
No, it's A, normal. But B, I will tell you that let's say prior to the month of July, we had 3 loads for every truck. Let's just say that in whatever division, brokerage or expedited, 3 loads for every truck. In the month of July, it's not that it became negative, it was 1.5. So we went from 3 to 1.5, and we're thinking we're in a depression. And I'm loading all my trucks.
About the
It's all
cycle. I mean,
based on your
everyone's worried
point of
about
reference,
overcorrection. We're at 14.5% rejections, which a year ago we would have killed for.
Absolutely.
And I think it's
Absolutely.
hard.
Same thing.
We're just waiting. Everybody's waiting for the cycle.
And I will tell you this, though, exciting on from my standpoint, that I'm hoping is showing something, because I really expect that August will start going back the other way. I really do. And I saw numbers today for projected next week's revenue that will probably be our highest of the year.
Congratulations.
I hope that comes through. Now, that's just projections. So, we all throw projections.
If it's a normal cycle, by mid to late August, you're going to see record numbers.
Well, we are in late.
Yeah.
I mean, it seems like early August.
Yeah.
I know, but
you're right.
But
It's happening. I
it
believe
keeps
it's happening.
growing. It keeps growing.
I mean, my memory's a blur. I'm not sleeping these days. I'm doing other stuff. David, you guys had one of the largest, if not the largest, team operations in the entire industry. How many teams are you currently running?
We have about 750 that are in that fleet, and I would say we probably need 20 or 30 more right there because of open trucks. So somewhere in that neighborhood.
I mean, at peak, how many teams?
Oh, we were at 1,800.
And what were you guys running at peak, Dad?
Well, when we started US Express, like 20 or 30 some odd years ago, we were almost 80%.
But what was the number of team count?
Don't
What did you guys
remember.
ever peak at? 2,000, 1,500?
Probably somewhere around 2,300.
Gotcha. Because you guys were, it was Covenant, US Express, CRS2.
That's right.
And that was probably
It was a 3.
it was the 3 of you guys that dominated. What happened to the team business
Well,
over the
if
decades?
you go back and look at the history, my dad was one of the first people to really get into that long haul market from Southern California points east. So when David started Covenant, he started real heavy with teams. When I started US Express, I was real heavy with teams.
Clyde was definitely.
And to a certain extent, we were bootstrapping that whole market. Because we had teams and hardly anybody else did.
Yeah. I think to answer your question also, though, I think what's happened over the years, and then we've also led an effort, and that to right size from a standpoint that I think the Amazon effect, warehouses got closer, you wanted it next day, et cetera. So that took down the team side somewhat. But at the end of the day, it comes this. To get the ROI on a team operation, you've got to be somewhere in the mid 80s ORs, 85, 86, maybe 87. If you want to get a good ROI, and that's what we started on, and says, customers, and my customers know, I love them to pieces. I don't make a dollar without my customers. So thank them for the ones. But we've actually gone to our customers and we say, listen, if you do not need these teams and do not want to pay me for these teams, I will get rid of them. And the market answered back in 2020 when the world came to an end, and we went from 1,200 teams down to about where we're at currently. And we're continuously asking that question. Are you willing to pay? Because these teams, guys, let me tell you, every 18 months, okay, how much is Freightliner or Peterbilt wanting for a truck? Oh, another 8 or 10 or 12,000 more dollars. Think about how often I'm having to trade these trucks. And if you don't get the ROI, I can put them in my chicken business. I can put them in my dedicated business and run these trucks 5 years.
So the headaches, it's interesting. We need to get a segment with David called Hug a Customer, because we have a pallet.
I love them.
Webb Estes sent us a pallet. He was the inaugural
I want to do a
show.
segment just on the chicken business.
That's right.
Honestly.
We'll get into the chicken business in a while. We know Clyde and Max aren't eating chicken. Clyde didn't. It's interesting because you talk about the challenges of you're running these things, you're high utilization, but the idea is with teams is you do get a lot of miles. What you're saying is a little different. It's the CapEx side that you have to constantly replace them.
That's right. We got to get the revenue. I mean, these trucks need to be generating about $10,000 a week on these trucks, not $8,500 a week.
So I've known you guys,
And the
both of
drivers
you.
work so hard.
They work so
That
hard.
means you have
It's a
to-
hard job.
Well, and you're also talking about, you said first quarter was kind of down on teams. Well, that's every year. So it cycles in and out.
In and out.
So you have to constantly adjust up and down.
That's right.
In order to keep that count at the right count.
So I'm going to ask both of you guys. By the way, they are step brothers.
Yep.
Clyde Fuller, Freight Caviar did a fantastic.
It was good.
A fantastic cover on Freight Alley. Credit. This is a countrywide. There's Clyde. He's the bigger than life character, sort of like Boss Hogg is how I describe him. Big old cigars, bigger than life and bigger than reality. But he had these old cab overs that, in my opinion, went hard. Both of you guys, growing up, I've known you both my whole life. There was this rivalry in Chattanooga of building two big companies, two big trucking companies. The family dynamic plays into it. But the truck count was also a piece of that. Who had the most teams? Who had the most trucks? David, you've talked about this change in direction, the fact that you guys have become disciplined. When did you decide that the number of trucks just did not matter?
Yeah, when my prophets told me that. I mean, first of all, in 40 years of being in business, I've been broke 2 times and just didn't shut the doors. And every company probably at one time or another has been broke and just didn't shut the doors.
Yeah.
And so you're continuously looking about how do I revamp the company and how do I make sure that we're going to be longevity and that you're going to continue going. And so it was all along those kind of lines that made us make all those kind of decisions. It says, here's who we need to be when we grow up. And so in 2015, when I made that decision, went to the board, and what I told the board that day was this: I'm so tired of the up and downs of my earnings. Let me tell you, one good thing about a team operation, when it's running like a third shift manufacturing, you're printing money. But let me tell you, let the weather in January, let the GDP go to 1 instead of 2.5, and you don't have the freight, you are not making those widgets 3 shifts, and all of a sudden that cost. Too many people in payroll, too many mechanics to fix my trucks. The cost just kills you, and your margin, you can literally go from 83 ORs to 97 ORs in a week.
Well, Wall Street is awarding you this is in 2008. Your stock was as low as 78 cents a share.
Yeah.
There was a belief, this is 2008.
Absolutely, we're gone.
That you guys might file bankruptcy at some point.
yeah.
You were on bankruptcy watch.
Yeah, that's right.
You've now got nearly $1 billion market cap. Your stock has been, it's right up to the right. We're up and to the right.
Yeah.
The Wall Street is awarding you, but you're a smaller, revenue's there, but in terms of total truck count, you're smaller.
Yeah.
When you decided to go on this journey, how painful was it to think that I'm making the right decision in terms of getting out of the OTR business?
Yeah, it wasn't. Again, so in 2015, went to the board. I said, I don't know what this means, but here's what we're going to do. I'm going to get deeper in the supply chain. Have no idea what it means. Thank the Lord, Delta Airlines came up there, and Delta, which we're still with them 11 years later, Delta wanted our teams to haul their engines and their tires out of Atlanta, Georgia, that had to be in LaGuardia, had to be in Minneapolis and Chicago, Detroit next day. But they also wanted me to do Chattanooga, Tennessee, and Columbia, South Carolina, and Auburn, Alabama. Every location for Delta went to. And so when you land in Atlanta and you look over there where they're working on planes, we got people in there and have for 11 years. Since then, we're now operating a warehouse for Delta Airlines, and that started it. It was a blessing. I don't know if Delta sold me or I sold Delta, because they were scaring me when they was telling me what they wanted me to do in 2015.
David, if my flight's delayed or it's a maintenance problem,
the first thing I do is this plane because of tires or brakes?
Okay, that's where all of its tires and brakes.
Tires and brakes.
Interesting.
If it's tires and brakes, it's me.
By the way, we need those.
That's right.
We need tires and brakes.
We got to have
them. Brakes especially. I've had my brakes fail on my own airplane as a pilot. Tort reform's a big conversation.
Yeah.
We have been covering back to back. Matt Leffler and I are going to get into torts. So he is going to talk about this whole legal situation happening in freight. But this all comes down to the fact that no matter where you're at in this, you are subject to these massive, massive lawsuits. Yeah. What are you hoping that the government does about tort?
You know, I heard Max say earlier that if we don't get tort reform, it's not going to matter. I'm paraphrasing.
That's right.
And it's true.
Right.
It's not going to matter. That's why I believe we have to get it. I am so happy with what DOT, but I'm happy with what ATA, Chris Spears is doing, leading this effort. I have probably been to Washington 6 or 7 times since October, and I'm very blessed in one side to have Ben Carson on my board that allows me to get some meetings when I need some meetings. And we are running with that effort to get tort reform. And I will tell you, we've went from forever, all of our careers, 0% chance of getting tort reform. I got it at 20% only because of Donald Trump, only because he knows it's affected him in court cases, only because he knows how hard it has been. And we've been fortunate enough to meet with him 2 times. We've been fortunate enough to meet with the Judiciary Committee 2 months ago. We have met with Jim Jordan 2 months ago. We're going, and I think I'm happy at 20% chance.
Well, look,
but it's got to happen.
It's got to happen.
If it doesn't happen, we're not going to have an industry at all.
Yes, you can't have this.
These cases are coming on so strong and so hard against these carriers, and it's destroying their balance sheets.
Yes, it is.
Well, the risk is, I mean, the insurance numbers are piling up. How much does insurance cost you more? Are you having to deal with insurance changes over the last?
Let me tell you, thank the Lord, a couple of things. Ours does not expire until next April. But in the last 3 or 4 years, we've got 50% of insurance, and my costs are up about 300%. 300% cost for 50% of total coverage. And guys, I'm going to tell you, I don't know what kind of insurance any of us got. I mean, it's like I'm naked on this quarter. We're dividing it by 2 on this quarter. As it goes up, the exposure just gets larger and larger.
Well, the problem is that the courts are awarding such large awards that the insurance companies have to continue to increase their charges.
Yeah.
And the carriers are having to, in order to keep the costs down,
Yes.
are having to take bigger exposures.
Yes.
And I mean, that's a big problem for this industry.
It's
You
an
know, we've
uncertain
got a
risk.
problem with returns anyway.
It's a major
And then you
problem.
compound it with that. I mean, it's got to happen.
I got to tell you, having been around this industry, grown up in a trucking family, have diesel in my blood, the thought of having to deal with this unknown risk of what this means, the pressure, for any operator who's got risk out there and these existential risks, it just seems like it's a lot to stomach.
It is. And as Max can relate to, and all of us can relate to, and that is, what's the first thing? We wake up of a morning, the first thing we do is get our phone to see if we had any bad accidents, right?
I used to do that every morning.
Every morning. And the
Yeah.
first thing
I
you do,
don't miss that every morning, like checking if I got any alerts or emails overnight of anything.
know.
What do I need to know?
Accident.
I mean, look, I think there's an argument that some of the unregulated parties that are out there having the more regulation, more risk management is important. There's definitely this industry's gotten too loose.
Yeah.
But when you're talking about the fact that we've covered multiple stories, there's the Utah nuclear lawsuit with now QXO, one of Brad Jacobs' companies, Beacon Roofing.
Yeah.
The jury decided that the driver was not negligent, or the carrier was not negligent. Still, Matt Leffler, we have Matt Leffler. Matt, that whole story was absolutely insane that the jury decided that the carrier wasn't negligent, but then still awarded an $86 million nuclear judgment against QXO. What was that nonsense?
The key to remember in all this is that juries get it wrong, trial courts get it wrong, and that's why you have an appellate process. Ultimately, these things take years to unpack. That'll be the same case with C.H. Robinson in Dallas. So even though you might get a verdict, like that doesn't make any sense. There's going to be appeals, there'll be change, but you might not hear that for a year or 2 years down the road. That's why it's so dangerous for motor carriers and brokers right now. You just don't know where the cards are going to land.
You just never know what the risks are, and that's the issue. I mean, there's so many cases in terms of just this unknown risk, and a lot of times it's just up to the jury. Emotion, these plaintiffs' attorneys get all fired up and get people fired up, and it's a big issue. Matt Leffler and I are going to dive into that. Stay tuned later for Freight Expectations. Real quick, I want to ask David a couple more questions. Production, just calm down. We don't need the music just yet. We'll get there. David, what is it that you're most excited about right now in this industry?
Where the cycle is, and quote, the super cycle that I think is at the beginning stages. That's the most exciting thing.
Do you think this is going on for years? You think it turns over in a year? Like,
No. I think it's, here's what I believe. I believe what the DOT has done is unbelievable from a standpoint, and you've had Derek Bars here, and that is, we don't care how much money a trucking company makes. We don't care how much money the customer makes, a shipper, a manufacturer. Here's what we do care about, is that the motoring public knows that the safety is on the interstate when they pass a truck. That's their whole goal, and they don't care about what that means. He is driving that process. Doing that, I believe, has taken out somewhere between 2 and 3% of capacity. Keep in mind, 2% moves the market.
Look, John Kingston, our oil reporter who's been reporting on commodities his whole life, has argued, and he educated us, it is not the percentage that matter, it's the incremental. As he says, the incremental barrel oil sets the oil price. Same thing in trucking. You need in any market, if you have one more load than you have a truck, people pay whatever. And that's why these markets can flip 20, 30% in a given hour.
Absolutely.
A given day.
So let's say that they've taken out 2 to 3% of capacity. I'm saying we're at first base.
Because there's a lot more coming.
I think there's a lot more.
And you and I are aligned on that totally.
Yeah, a lot more is coming. The regulators, whether we're talking state, government, and look, we've had conversation with Derek Bars, we've had conversation with DOT. The fact is that just like the STB, and we had our rail summit earlier this week, we had the benefit of Union Pacific and Norfolk's CEOs here in Chattanooga, along with the chair of the STB. What they've said is one of their roles as the STB is to stabilize the economics of the rail industry, because they will, and they said this is one of their charters, if they don't stabilize the economics of the railroads, and we all saw what happened in the 80s, then you're going to have safety issues. And so having an economic return, given the benefit of companies that operate safely to make investments. And that's the other problem. When you can't operate safe and you got to deal with a lot of the cost increases, inflationary issues, and you haven't made a profit because of this excess amount of capacity, even though, and look, companies like Covenant, companies like US Express, the companies that we're covering, they have no choice but to make these safety investments.
You have to.
But it's that mid-market carrier that oftentimes will sacrifice the investments in training and in equipment. Matt Leffler likes to remind us that 1/5 of all trucks on the road are not roadworthy because they're just trying to stay in business. And that is not what you want if you're a safety regulator. Your responsibility is to keep the trucks safe on the road, but the companies must make a return. And you're talking we're bragging about the fact that, I know this is great, and I don't mean to dismiss it.
I know.
A 96 OR?
I know. Pathetic.
That is not great in the world of companies. Congratulations, by the way, but that is the fact that it's 96.
It's pitiful.
Tells you everything you need to know about how
we got to do better.
Well, what people don't understand about ORs is you almost have to make at least a 92 just to break even.
That's right.
Because you got to pay your
most
working
shippers
capital
think when you say 92 that you're making an 8% profit. That's not true.
No.
You've got interest, you got taxes, you got all kinds of things that gets added to it, and it really takes at least a 92 to break even. And this industry doesn't break even very often.
I would love to track, we should do this at some point. We'll have you back, David, to track the history of Covenant and US Express and other carriers and how many times you guys actually got to 92, because the history is...
All 5 times.
you have these businesses that are among the most successful, have all the benefits in the world, and you're just struggling to have oxygen.
I know.
It is a difficult, brutal.
But it's
brutal
getting
business.
better.
It is getting better.
Yeah,
I do hope
that that's the closer of that is that the FMCSA, the DOT, we know that they've asked for our data. They use it to ensure freight market health, right?
I got a text. I don't know if Derek wants me to share this, but I'm going to anyways. I was sitting down here with Weston Walt, our county mayor, Mitch Patel, he's one of the local hoteliers in town, and I get a text message from Derek, call me. And I'm like, okay, the guy in charge of the FMCSA, the primary regulator, I probably should step out of this meeting. Like, no offense against Weston Wamp, our county mayor.
Yeah.
I thought that maybe Derek Barge is a little bit more important. So I step out and I'm like, what's up, man? He goes, I need to know how rates are today. So I told him the NTI rate. And he goes, what were they pre-regulation? Pre-COVID. And I told him the NTI rate. And I said, Derek, what's going on? He goes, the White House wants to know. And I think this goes back to the fact that the regulators, and I use the STB as the example of this, understand that when you don't make a profit, when this industry isn't making a profit, we clearly know you aren't making the kinds of investments.
Yeah.
You can't invest in safety. You can't invest in new equipment. You
cut
can't
corners.
invest in quality drivers.
Not the big companies that are cutting the corners. It's the mid-level operators, those family businesses with hundreds. Carol Fulmer went bankrupt.
Yeah.
They went bankrupt
sad.
because there's too many drivers on the road and many of them are unregulated. And what's not fair, David, is that the government allowed non-regulated entities, non-regulated drivers to make lots of money. Super ego, rented money.
Yeah. Yeah.
They weren't operating compliant. Well, you guys are just struggling to survive.
That's right. Absolutely.
Man, we could do this all day long, but Matt Leffler is in the box waiting to talk about the biggest story in freight, which is all of the regulatory lawsuits. And because we are generous here at FreightWaves Today, we are giving you free legal information, not advice. As Matt Leffler likes to remind us, if you're using Matt Leffler as your attorney and you're not paying him, you need a real attorney. I mean, you're a real attorney.
He's a real attorney. He's just not working
You're
for
a real
you.
attorney. What was your quote? Your favorite quote?
If you think you need a lawyer, you probably do, and I'm not your lawyer unless you're paying me. Then I'd love to represent you. So yes, I am a real life lawyer, but I'm not your lawyer.
No one is paying you on FreightWaves Today, so just use his advice. That's the disclaimer. We'll be right back with Freight Expectations. David, thank you so much for coming in.
Glad to be here.
Always congratulations on a great quarter. We look forward to having you back next quarter to tell us all the great things.
Come back anytime.
It is fun to talk to the two of you guys. The newspaper, I bought the Times Free Press for our audience that doesn't know. It's the local newspaper here in Chattanooga. They're going to do a story on Sunday. I was talking to the reporter. He's in this conversation about the history of the family, and I was telling him about Clyde and David and Max, you guys, and he asked a question: was it always friendly? I said, not so much. And so. In the 90s, in the early 2000s, there was a lot more rivalry. You guys were arm wrestling and competing.
You know, the thing is, though, Max and I always loved each other.
We do.
We did. We always loved each other.
If I couldn't haul the freight, I want him to haul
That's
it.
right.
I don't know if that's true. I'm going to go back and find some people to dispute that. We're going to fact check that all because I know better than that.
There's a story behind it.
There's a great story behind it. We'll be right back. Great Expectations. Stay with us.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D to keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, the sharpest minds in freight take on the biggest questions in the business, the trends, the technology, and the forces shaping what's ahead. Then the clock starts. 7 minutes, no exceptions. The cutting edge of freight tech goes head to head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, the sharpest minds in freight take on the biggest questions in the business, the trends, the technology, and the forces shaping what's ahead. Then the clock starts. 7 minutes, no exceptions. The cutting edge of freight tech goes head to head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
Welcome to Freight Expectations. We know you have been clamoring and you've missed it and you've missed Matt Leffler. Matt, I got to tell you, I love the green. What is the story here? You got rid of the red jacket?
Well, the red jacket is at the laundromat right now, Craig. I was just in Dallas and Houston for a VUMA event, and so it has to get taken care of because it's 100 degrees out there, Craig. It was 100 degrees. That's not meant for human habitation.
Well, I am, all of our guests today have had blue. That's FreightWaves Blue. We were proud of blue here. We're in green, celebrating. We had ArcBest on. Even the ArcBest CEO had blue on.
Oh, there you go. Well, I mean, yeah, Premier Trailer Leasing, they're green and white. That's a good thing. And I'm, of course,
celebrating
Michigan
some
State.
Blue color here at FreightWaves. We like blue. It's our favorite color. Leffler, you have been away.
I think
And probably the most momentous set of decisions in a courtroom as far back as I can remember, and I would argue at least in transportation, maybe the biggest nuclear verdict ever. Reactions to Lupus Superior?
This is crazy. I mean, here's a motor carrier that has a satisfactory safety rating. Now, there's other things that they had going on, but the story is like every one of these major truck accidents, absolutely tragic. A driver for a Lupus reports that he's feeling sick to his bosses, the dispatcher, and that's the last we kind of know. The driver ends up not stopping at a traffic stop and kills a bunch of people. Unfortunately, a bunch of lawsuits ensue. Lupus is sued. The driver is sued, Gonzalez, but he's passed away, unfortunately, so no one really can talk to the driver about what was going on. And of course, our friends at C.H. Robinson, they get sued and they ultimately are found to be a co-employer. They borrowed the employee of the Lupus Superior. And that's what gives this rise to a $604 million verdict around this idea of vicarious liability. We have a lot more to discuss on this case. There's no final judgment in place yet. It will absolutely be appealed to the appellate court, and then whenever it happens there, it'll get appealed again to the Texas Supreme Court. But if you're a broker, you see this case, there is not a single way you can survive this. This is a catastrophic type of event. Obviously, someone loses their life. It's always horrifying. But the brokerage industry as a whole is watching this case very closely because their entire business model is now at stake. Are these drivers your contractors or are these drivers your employees? That is the question that we are all wrestling with. And as we said before, trial courts get things wrong all the time, and we'll find out if they get this one wrong. But it's happening right now. It's big, very, very big case.
Matt, I want to be very specific here because you and I are subject to a lot of hate on the internet. I certainly get more than you. People seem to like you better. I'm not jealous. I love you, man. I get it. But this only matters in terms of the potential issues in terms of C.H. Robinson, in terms of existential, which is really what Citibank described this. And it only really matters to brokers in terms of the risks if this gets held up, it doesn't get thrown out on appeal. Now, we will argue about whether the optics, because I actually think the number itself and the optics of it is a huge problem for brokers, generally. But we'll talk about that in a minute. Insurance companies have to price it in. But in terms of existential risk, it really only matters if this gets held up and does not get overturned. So let's break down each piece of this because there's a lot of here to actually understand. So number one, you had a situation where C.H. Robinson hired a motor carrier. John Kingston shared with us in the earlier segment, which if you missed it, I recommend you go listen to it if you're a part of our audience. The driver was an employee, he's a W-2 employee of this carrier, Lupus Superior, a 200 truck operator. So let's break that down first because that's important. He tells someone, was it C.H. Robinson that he told that he didn't feel well?
No. So let me be very clear. We do not have very good confirmed evidence that is publicly available about the discussions between driver Gonzalez and C.H. Robinson. Everything we see in the public record is that the driver was talking to his dispatcher and C.H. Robinson was also talking to the dispatcher. So the dispatcher reported to Robinson that the driver felt ill and the driver never spoke to C.H. That's our current understanding. Now, when this case eventually gets appealed, you'll have an appellate record. You'll have access to all of the different documents and depositions, and then we'll have a much better understanding. But generally speaking, my working assumption is, as of right now, is that C.H. Robinson and that driver did not talk directly. They went through the dispatcher, which is what most trucking companies do. They have the dispatcher working with the brokers, and it's not the broker talking to the driver every single moment, unless, of course, it's an owner-operator or a very small fleet.
Okay, so first piece, no communications as far as we know.
Correct.
As far as been discovered. And obviously, if there were communications, it would have likely been discovered by the plaintiff's attorneys because you would have had text messages or something like that.
That's right.
Is easy to discover. It does stay, by the way, it stays out there, people. Like you think you're going to delete your messages? The network
that metadata is around forever.
Like I am, my wife and I are a Dateline connoisseurs. We watch it. I know this stuff. So you're not going to delete it. So it's going to be out there, particularly in a fatality. It would have been in discovery almost immediately because the fact that plaintiffs' attorneys are jumping all over this, the driver dies, they're going to do discovery. So there's very little chance that there was communications that we don't know about to C.H. Robinson because this stuff would have been obviously very easy to discover. So that's the first thing, because I think it's important. The second thing is we have C.H. Robinson hires this lupus superior who has a satisfactory rating at the time of the accident, still has a satisfactory rating. Matt, as far as I can tell in the records, the carrier had a satisfactory rating since 2014. Is that correct?
Yeah, that's correct. And here's the thing that everyone needs to keep in mind. When you talk about carrier vetting, the reality is you can always do more. We can go back and say, okay, only 6% of motor carriers have a satisfactory rating. This company looks like they're a quality company to work with. That's never going to be enough. It's never going to be enough. Now, they had some other safety violations, but every motor carrier gets violations from time to time. If you look at the vetting softwares before this accident, I don't know a single one of them that would say lupus superior is someone you shouldn't do business with. And if you look at their safety rating and what they've been doing in business for as long as they have, they've moved over 200 loads for CH before this accident, safely, I might add. So they had all the track records of this is the type of motor carrier we expect you to hire. But obviously, when some accident happens, the plaintiff attorneys have no choice. They're going to sue everybody. They're going to sue the driver. They're going to sue the motor carrier. They're going to sue the broker and any other people they can find ways to go after them, including shippers eventually. So this is exactly right. This is a motor carrier with a satisfactory rating that ends up in an accident. And again, we don't know why this driver ended up crashing. No one knows, other than he said he felt sick.
I mean, look, he could have gotten sick. He could have passed out. He could have taken medicine. We just don't know. I mean, I guess is anything in the blood test. I imagine any fatality. I think they're required by law. Most states require them to do some kind of blood test. I guess nothing came out of it, right?
Nothing that we have seen. So the public record and all the evidence that's been collected, it's not necessarily available easily. You can go to a website and pull publicly available documents to get a better understanding. But ultimately, we'll know a lot more as this case progresses. We don't have a final judgment, right? We have the jury charge that gives the proportional responsibility. We have the finding of the borrowed employee. But there's still a lot of work ahead of us to figure this whole thing out. But the reality is, for a broker, if you're found to be a co-employer or a borrower of the driver for the motor carrier, your business is in desperate trouble because there's no way you're built to be the employer of record for so many truck drivers.
All right, so Matt, I want to talk about the judge certification because that's the other piece of this. I mean, this is a very complicated case. This is not your typical case, and we're going to get into that in just a second because it's really, really interesting. The judge has not certified it. Let's talk about what does that look like?
So this is what's so fascinating about this moment in time for Americans, especially when we talk about transportation. We found this information before we have a final judgment. So they're still working through the process. What C.H. Robinson is likely to do is file a motion to say, hey, reconsider this judgment, reconsider the liability finding. Maybe we have to appeal it, those particular things. But regardless of what happens with the trial court, we know for a fact that C.H. is going to appeal, and we know whatever happens on that appeal, it'll be appealed again. Just like the Werner Enterprises case in Texas that went on for 4 or 5 years, millions of dollars spent, with Werner eventually being absolved of liability, the CH case is going to continue along that same process. So there's a lot of stuff that still has to happen before we have a final judgment and that we have a complete understanding of the facts. But what we do see, what we do know, is that this is a massive verdict that has deep implications because there's only a handful of companies on the planet that can take a $600 million punch in the gut, let alone this thing is going to be going on for quite a bit.
I mean, look at the $600 million. I mean, C.H. Robinson, like as you mentioned, not only on the fact that this is a massive judgment, really not a lot of companies could do it. In transportation, particularly trucking, you're talking maybe a dozen total companies that could afford to even have the resources or to even borrow the money to write the check. I mean, we're talking about a existential. I mean, Citibank has described this as an existential risk to brokers. So
Absolutely.
Let's get into all the things that we've got. So first of all, this clearly, the jury felt compelled to punish C.H. Robinson and the carrier and the drivers who did Because $600 million is what that's doing, is it's punishing it, it's sending a message. We're going to send a message to this driver, this defendant. The driver's dead. Do we know if Lupus did anything that would warrant a $600 million nuclear judgment?
No, there's nothing that I have seen that has indicated this is like a punishment attempt on the Lupus Superior or for C.H. Robinson. Nobody knows the value of a human life. When it comes to litigation like this, you get these big numbers that get thrown up because jurors are accustomed to seeing headlines and they say, this is the number we think is fair, and they start tallying up all the numbers. This is why tort reform is so important when we talk about cases like the case with the trailer manufacturer Wabash. That got reduced because of the nature of the tort reform that they had. But yeah, these cases, these numbers are astronomical. And it is, without a doubt, an existential threat to the brokerage industry. If you are a broker and can be found liable for co-employment of a driver, it doesn't just rest with the liability finding in a catastrophic accident. This is things like workers' compensation, unemployment, wage and hour. All of these things get tied up into this. And we talk about this privately, but if this case stands, and I don't think that it does, but I've been wrong on many things, and I continue to be wrong on many things. FedEx and Amazon, their delivery drivers, those don't work for FedEx or for Amazon. Those are contractors. And I guarantee you, FedEx has more control over the drivers coming to your house than C.H. Robinson had over Lupus Superior and the driver Gonzalez, who passed away, unfortunately. Okay, so there's a lot of questions.
We're going to get into that in a second, but I got, before we do that, I got to ask questions. So there's nothing in the case. I mean, we've covered cases where, I remember the TQL case where the woman was pregnant, lost the baby because she was working from work. I felt for that woman. Like, I felt sorry for her. You can feel the pain. And yes, losing family members, dying, you feel it. But is not clear to me, look, 5,000 accidents every single year that involve heavy-duty trucks. Tragic. Some of those accidents have a horrific set of facts where the driver did, he's on drugs, he's doing something he shouldn't be doing. Even you could argue that driver drives at the median, doesn't read the signs. When the case that I'm talking about in Florida, those are pretty clear-cut cases. This is a driver who certainly killed people, did not stop at a traffic light. But and I don't mean to call it routine because I don't want to dismiss the lives that were impacted, but it doesn't, the facts of the case don't, to me, demonstrate why this is worth $600 million. And I know that I'm putting a price on 6 people's lives. Yeah. But what was the jury thinking that really drove this kind of anger to a $600 million judgment?
That's a good question. I don't know we're ever going to have a satisfactory answer to that. What's going to happen is we'll see in the record, who were the people that passed away, what family members made claims for losing, call it loss of consortiums, the loss of the affection of the person that you lost in that tragic accident. So we don't know what motivated the numbers. We know the numbers are high. We know that it's because it's in a very difficult place to litigate, just like Cook County in Chicago, and you have Dallas County and Dallas, like that. Those are difficult places to be a defense attorney. It's difficult to be a business in those areas. And so part of it is the judicial venue that you select for litigation drives the numbers way more than most people realize.
Which is also interesting because this accident was actually in Mississippi, but they sued them. They're based in Grand Prairie, Texas. They sued them in Dallas County. That in itself is an interesting fact here, Matt. I mean, obviously, people are going to choose the most. Again, there's so many legal. I imagine, as this plays out, you're a university professor. By the way, are you going back to Michigan State and
always?
Classes?
I love it. As long as they can tolerate me, just like as long as you can. So
I'm sure you're going to get into this with your students because there's just so much to really unpack in here. But so this is now being. How is that even allowed?
Yeah, so it's called forum shopping, and it is discouraged to shop for forums, but it makes all the sense in the world. When you are a business, and there's an accident, you can be sued in a couple different places. You can always be sued where the accident takes place. You can sue where the locus of all of the evidence is. So at the scene of the accident, you can sue there. You can sue where the company is incorporated. If you're incorporated in Delaware, you can be sued in Delaware for things you do in other states. And then the place where your principal place of business, that in this case with Lupus Superior was Dallas, Texas. So what they end up doing, what plaintiff lawyers do is they say, where are the places I can sue? Which places will likely give me the best jurors that will give me the biggest numbers? And that's where I'm going to sue. That's partially why the ATA and others have sponsored this thing called the FAIR Act, which is to remove cases from state courts to federal courts, again, trying to shop a better venue. You think you get a better outcome. But that is totally ethical. It is something that lawyers are supposed to do. And then opposing counsel can try to fight you and say, hey, this is the wrong venue. Let's go to some other place. But everyone was like, okay, we'll do it in Dallas. Let's see what happens. And oh my goodness, that was a surprise for everybody.
Yeah, it's an absolutely crazy story. We're going to be right back with messages. I'm going to get more into this because this is absolutely insane. And we're going to talk about the impact. I mean, Matt teased it. What does this mean for everybody with contractors? And what does this mean with FedEx, for Amazon, for brokers overall? We're going to get into all that. Stay with us. Great Expectations will be right back.
The world doesn't wait, so neither do they. Wheels on the interstate, boots on the site, hands on the shipment. We build for the world out here, and we build it with the people who live it. Ideas from the field, made real by world-class R&D to keep the operation sharp, the front lines safe, and the world moving. From one cab to a global network, billions of miles, trillions of data points, every one making your operation better. And we never build it alone. Samsara, built with operators.
Once a year, the entire freight industry stops what it's doing and comes to one place, Chattanooga, Tennessee. This is F3, the Future of Freight Festival. It isn't just a conference. It's the largest festival in freight, built to pull you all the way in. The energy, the ideas, the atmosphere, and the people who move this industry forward. Over 50 speakers, 4 events across 3 days, founders, executives, innovators, and disruptors, all under one roof, all asking the same question: what comes next? On the main stage, the sharpest minds in freight take on the biggest questions in the business, the trends, the technology, and the forces shaping what's ahead. Then the clock starts. 7 minutes, no exceptions. The cutting edge of freight tech goes head to head, live, battling for best in show. When the time's up, the lights go out. And in between, the conversations that don't happen anywhere else. The connections that change the trajectory of your business. The relationships you'll carry long after you leave. Because when the sessions end, the festival begins. Live entertainment, unforgettable experiences, a celebration of the world of freight, and an energy you won't find at any other event in the industry. The leaders you need, the access you won't get anywhere else. This is where knowledge is shared, where deals get done, where the future of freight gets decided. F3, Future of Freight Festival, October 27th and 28th. The Signal, Chattanooga, Tennessee. We'll see you there. Register now at live.freightwaves.com.
Welcome back to Freight Expectations. We're going over because this is earnings season. There's so much to talk about. Matt has been missing in action somewhere in the country for the last week. He wasn't here last week, so we're just extending the show out. You know what? I can do that, and I'm going to do it right now. And we're going to get into the conversation about what all this means. So, Matt, now we're at the point where jury's awarded it. The judge has got to certify it. Do you think that there's any chance the judge won't certify it?
No, there'll be a final judgment. I mean, there might be a question on some legal pieces, but no, I think it gets certified and it gets appealed, no doubt.
Okay, so let's talk. So, certification happens. The $604 million. As I understand it, C.H. Robinson is going to have to put up some percent of it, or the insurance company, and in the form of a bond to even go to appeal. And the courts are going to demand that.
Yeah, and the bonds vary state to state. I don't know specifically what CH will have to put on this. The biggest concern for CH right now is not necessarily on the bond they might have to post for appeal. It is the post-judgment interest. As we remember the Werner case, they lost that initially at the trial court level for $90 million. They appealed it, and when they lost that first appeal, the number ballooned to $130 million. So there's a thing called post-judgment interest, and it will continue to accrue somewhere between 5 and 15% or so. It depends on a bunch of different factors, but there will be that number increases every single day until it's eventually settled. So CH is betting big that they're going to win this as they fight this thing up. And there's one thing I admire about CH is they will fight until the very, very end. Some companies will capitulate and settle. I don't get that impression from CH. I think they're the ones that have the desire to keep going. And maybe it doesn't stop at the Texas Supreme Court. There's possibility, very real possibility, that this might even get up to the Supreme Court of the United States, though, again, not super likely. It is possible, though.
Well, I mean, we're talking about an existential risk to C.H. Robinson and every freight broker. Because look, there's a number of cases. We had Cassandra Gaines on, who's fired up, by the way, about C.H. Robinson. C.H. has existential reasons to basically continue to fight this, frankly, because they do not want to set a precedent where big judgments get paid out and settled. So as John Kingston says, the risks are all on the fact that if the risk are if they pay it, or even settle it, that it could just invite a lot more problems down the road. Because where do you stop?
Yeah, absolutely. This is just the beginning. This is just the beginning.
Big.
Absolutely.
So let's talk about, it's in Texas, which is a strange state to have the biggest nuclear judgment in history. But you've talked about the fact this is in Dallas County.
Yeah.
Any read into the fact this is in Texas?
I mean, Texas has been importing a lot of Californians, and the Californians bring some of their ideas. So that's certainly an issue. No, but realistically, big metropolitan areas are people that are generally hostile to big companies and will go against the companies when it comes to big lawsuits like this. And so Dallas County is a fairly liberal area, and so that's why you see the big numbers, I believe. And this is just the nature of how plaintiffs are making their cases. They're trying to find venues where they have the best chance of a big number, because these lawyers, remember, they make a third of this. So this is like a lottery ticket for many of them to successfully
By the way, Matt, just
win.
Not to go too deep into this because we could spend all day, but it strikes me that the more liberal or democratic a city is or a region is, the more likely you're going to see nuclear lawsuits. Is that a fair statement?
Yeah, I mean, the colloquial term is called judicial hellholes. There's places in this country where if you have an accident and you get sued, you're probably better off just settling it. Get rid of it because you can't.
What are the other judicial hellholes around? Because I want to avoid doing any business in these.
Yeah, I mean, you're not going to have a choice. Chicago, New York, LA. I mean, there's a whole bunch of them.
Chicago? We're going to build a studio up in Chicago. I don't know about that.
Don't open a trucking company in Chicago, Craig. You'd be fine.
You think a studio? I mean, as long as somebody didn't trip, this can get played.
Make them sign waivers.
I got to be careful what I say, because some plaintiff's attorney and plaintiff's attorneys who listen to FreightWaves Today might use it against me. So I'm always thinking about that when I go after plaintiff's attorneys for all the things that they could say. I'm not sure that I'm doing myself any favors, Matt.
Be careful of slip and falls. There's a lot of money to be made in the slip and fall business.
Yeah, unfortunately. I mean, Chicago is known. I guess it's a judicial hellhole. That needs to be the conversation. We should put that out there when we have our morning show, which you're going to come on.
Absolutely.
You're going to host the inaugural show.
Let's do it, man. Put me in the game, Coach. I'm ready.
We sent over the offer. We are going to have a studio up in Chicago. We're super excited about it. More details to come. But Matt, let's get back to this case. So you're in this judicial hellhole. They award $604 million. Nothing gets paid out. Maybe this bond gets put up, or a bond will get put up. It's going to go through an appeal process. Where do we go from here in terms of appeal?
Yeah, so this is going to get to the appellate court. They'll hear the case. It does not matter what happens on the first appeal, whether CH wins or CH loses, or the plaintiffs, whatever, it's going to get appealed to the Texas Supreme Court. The number is too big, the stakes are too high, and the application of the law is very, very interesting. So this will absolutely go to the Texas Supreme Court eventually. We might be 4 or 5 years away from that, but at least on the first appeal, we're probably anywhere from from like, let's say 9 months to a year before oral arguments. And then you'll have an order or an opinion in a couple months after that. So this is going to be the long haul. This is just starting for this case.
Now, Matt, we're in county court or city court, I guess county court, Dallas County.
Yeah, state court. Yeah, you're in state courts. You're in
state court, so you're going to work your way, and I guess there's probably districts in the state.
Yeah, so it goes like it'll be the lowest level, then the appellate courts, and then the Texas Supreme Court. So it mirrors to an extent how our federal system works. There is a question, though, Craig, is there a potential argument to be made about the vetting process that CH used for lupus superior? So there's two ways CH was found liable. One was you controlled the driver so much that they actually were an employee. And the other one was you were negligent. You were just negligent in your processes. So those two issues are going to be the ones that, at least for the control aspect, that'll be state court only. We'll decide that. But there's an argument on the federal side that may get up to the Supreme Court if CH really wants to. I don't know if SCOTUS would take it, but those are the two findings of liability. One, you were negligent, and two, you were the employer of the driver.
Okay, so at some point, let's assume that this thing keeps getting upheld. At some point, the courts are going to hear, this Texas Supreme Court is going to hear a case being made that the jury found that the driver was an employee.
That's right.
The driver was a W-2 employee of Lupus Superior. In this transaction, became an employee of C.H. Robinson.
That's right.
Explain to me, other than using the word hellhole district, how did that happen? How did the jury become convinced that this driver who lost his life, now you could argue whether he's responsible or not, and we don't have all the facts, he was suddenly an employee of C.H. Robinson, Matt?
Mm-hmm.
Make your case.
The way this works, and first let me be very clear. Most Americans have no idea how the brokerage industry operates. Most people have no concept of how things get from one place to their store shelf or how it gets to your doorstep. Most people don't understand that. So when they hear about a broker, they go, "Oh, clearly this broker must be the one who's controlling all of this because they're the ones in the middle." And the reality is, like, that's not the case. The brokers are not controlling these drivers. But what ends up happening is a jury hears a story that the driver was only going from this place to that place because C.H. Robinson helped organize it. Now, C.H. was talking to a dispatcher. They weren't in the weeds with the driver every single moment. But when you're a juror and you have the question of a bunch of fatalities, a bunch of claims against a variety of companies, who's the one you're going to be most sympathetic with? Generally speaking, drivers are being looked at as victims just as much as the people that are injured in the passenger cars. And so you look and say, who can you go after? And so with this case with Lupus, what ends up happening is even though Gonzalez was an employee of Lupus Superior, because his work was to drive a goal within CH, and there's a whole control test that we can talk about later on, but because of the goal of advancing what CH wanted, you're no longer an independent contractor. You are an employee who's been loaned to you by Lupus Superior. And that is a distinction that the brokerage industry simply cannot endure. Brokers have known about these cases for decades. That's why you don't have brokers calling and saying, "Hey, are you tired today? Are you feeling sick today? When was the last time your truck got an oil change?" They don't want to control people, because when you control, then you're on the hook for this thing called vicarious liability, or we call it in Latin, respondeat superior. The master answers. So C.H. Robinson, you're the master of Gonzalez. You're on the hook for everything that he did. And it doesn't matter if it was a safe motor carrier or a conditional or unsatisfactory. Doesn't matter. The moment you are a co-employer, this person, you're responsible for what they do. I mean, this is why it's completely unsustainable and why the industry has gravitated towards this case, because this is a moment we can generally help the American public understand what role brokers play in our supply chain. And ultimately, if this case is upheld, that type of law is upheld, brokers will not work in the state of Texas. There's no way. There's no way. But this is the world we live in right now.
But Matt, I mean, it comes back to this argument about whether he was an employee, was not. I think they've got multiple layers of defensibility. It's W-2, the W-2 employee of Lupus Superior. Lupus Superior was a contractor. I mean, it's no different than if I'm, working on my house and I hire someone to come install an HVAC unit or a TV, that person is doing what I'm asking them to do to install the TV, and they end up getting injured. That person was never an employee for me. How is that any different?
It really isn't. I mean, this is why this case is so bizarre. I do think that the finding of being a co-employer is wrong. I think it doesn't make any sense because, to your point, if you hired a painter to paint your house and they killed someone on the way to your job site, are you on the hook because they're advancing something on your behalf? Of course you're not. Of course you're not. But that is the challenge we have right now. People mistake what the broker does with being basically an extension of the motor carrier. And maybe in the before days when there was pre-deregulation and the salespeople and the motor carrier part were all the same business. It's not the case anymore. Small motor carriers depend on brokers for freight, and brokers depend on small motor carriers for capacity. They both shared the risks on certain parts of the transaction, but brokers are not equipped to say that the truck driver is unsafe to drive. And I've heard this argument over and over again that CH should have called the driver, should have said, "Are you feeling okay? Should we get another driver on there?" That type of conversation is how you become an employer, by controlling somebody. So brokers are trained generally not to do things like this. So this case is without a doubt an existential crisis for what brokers do right now, far more than the Montgomery case ever could be. Because this
federal preemption existed. If the Montgomery case had ruled that brokers were responsible for negligent hiring, if it had existed, well, we have seen a 604. If it was ruled in the Supreme Court that F4A was going to hold up and it allowed for federal preemption, would we be even talking about a $604 million nuclear lawsuit, Matt?
Man, it's tough. I think jurors...
What a coulda, shoulda kind of thing?
Yeah, I honestly have to say no. I'm saying these cases were happening regardless of what happened with Montgomery. They're happening 100 times across this country right now. Going after the broker is what the new game plan is for every single trial attorney. Because what we're going to do, Craig, is we're going to say, I don't know if you controlled the trucking company. I don't know if you didn't do a good vetting process. Either way, I'm going to sue you, and you're going to prove to me whether or not I did it right or did it wrong. And it's the game plan for every plaintiff attorney going forward is to make these claims. And maybe the facts support it, maybe the facts don't. But it's like AB 5 2.0, and that's what people, I think, are rightfully concerned with. It'll get overturned, Craig, but man, a lot of people are excited right now.
Yeah, Matt, do you think it's 100% certainty that it gets overturned?
God, I wish I could say that, Craig. I thought that Montgomery would go the opposite direction. I was wrong there. I would say this. Whatever happens at the appellate court, once this gets to the Texas Supreme Court, I think CH wins. Like that Supreme Court Texas.
I mean, you have very little doubt on that. We need a poly market on this thing, don't we?
I think we should. Someone should make money off this.
We should totally do a betting market on this because, like, look, it's interesting. It's incredibly intriguing. And look, I'm not an attorney. I won't even pretend to be one. But it defies everything I know about employee, employer, independent contractor relationship, vendor relationship, 1099, W-2, very different environment. It just doesn't make any sense to me. It just feels like it's a defendant's, in terms of attorney, their ability to appeal. If you're taking this case on appeal, it feels like a slam dunk to me. At least that he wasn't an employee. Let's say, last point on this. If they prove that he wasn't an employee and that gets thrown out on appeal, does it actually change the outcome of the $604 million liability?
Yes and no. So right now, CH is on the hook for 23% of the vert on the negligent kind of theory, the negligent selection. That may or may not get changed on appeal. But what is important is the vicarious liability, the entire dollar amount. That number would not be owed by CH. That would be owed by the co-defendants, the estate of Gonzalez, who was, again, he's passed away, the trucking company, Lupus Superior. I think it's fair to say that Lupus Superior, as of right now, is defunct. I mean, maybe they're still running, but they're on borrowed time. This case will destroy anything they have. So when it comes to CH, if they win on the vicarious liability piece, this borrowed employee piece, they may still be on the hook for $200 million, or still $100 million, or still money that they may have to pay. But at least if you see it right now, that's the path forward, is to try to challenge the vicarious liability finding and then continue to litigate as best you can this negligent selection piece, which is the 23% finding of fault that they had.
All right, Matt, 2 minutes. Make your case on why this is something that every broker every contractor, every company in the space needs to be watching.
This is a case that the U.S. Chamber of Commerce needs to be watching. If you are a business owner, if you own any businesses, you hire providers to do things for you, whether it's to do janitorial services or uniform services or HVAC or painting, whatever. When you look at people you hire to accomplish a job on your behalf, it's an arm's length transaction between two entities that are businesses. But what happens when you decide that whatever you agree to in your contract doesn't matter? When we say, okay, I get it, you don't want to call them an employee all the time, but you are a co-employer because you had some level of control. That is the nature of hiring subcontractors and independent contractors. You tell them the goal, you give them the parameters, and they can solve it through the methods and means that they have at their disposal. And if they don't perform well, you can get a different contractor and move on. That's the model of Amazon and FedEx with the delivery service providers that they have. And if this case stands, if this is what the new normal becomes, then you would never have independent contractors because they were employees all along. That is not the law. That is a wrong decision. And we'll see when this thing gets further along. But why you should pay attention now is you are watching the roadmap. You are watching the strategy by which your enemies, your adversaries, will destroy everything that you've built. That is not a slam on plaintiff attorneys. Their job is to make their clients whole. And how do I make somebody whole if a motor carrier is defunct the moment I sue them, or if they have a very small amount of liability insurance? You have to reach up, go after the broker, go after the shipper, and move forward. So this case is incredibly important for any business owner that wants to know, what is my potential responsibility if something terrible happens? If you don't have the protection of independent contractors, you are opening up a world of chaos.
Sun Tzu says you should know thy enemy, study his actions, and don't hit where he's strongest. So lots of opportunities for plaintiffs' attorneys, for defense attorneys, for people in this industry to figure
Let's open
it all
a law
out.
firm, Craig. Let's open
I'm sorry?
a law firm. Let's open a law firm together.
I have no desire. I don't like attorneys. Being honest.
I'm one of the good ones.
I like you, Matt. You're my only attorney I like. We'll be back on Monday. FreightWaves Today continues another week of earnings. We got great earnings coming up. We're going to do the full roundup. We've got FreightWaves editor Todd Maiden's going to tell us all about these earnings conversations that keep rocking. We also have Trent Broberg, who is the CEO of Full Bay. Trent has been around this industry. He's a truck stop.
Full Bay's a great company. Great company.
Yeah, it is. I mean, you're maintenance. You're a big fan.
Absolutely. Oh, I love Trent. What they've done with Full Bay is phenomenal. For small shop owners, great technology, great platform.
You know, Full Bay was at the first Transparency 18 conference that FreightWaves hosted, now known as FreightWaves or F3 or FreightWaves Live. He was there, the inaugural one. He's going to tell us all about what's going on at Full Bay. We're excited to hear it. And Matt, I know a man doing maintenance stuff as a man after your own heart.
And he's also on the board of Wabash, I think. So you can talk to him about trailers, Craig. We all love trailers.
Trailers and maintenance. Leffler, if we could just add some Supreme Court nonsense in there, we'd be all together to be your show.
Absolutely.
Join us next week at noon every day till 2. Appreciate you. Have a great day.